Thank you, Mr. Chairman. Mr. Lew, welcome. And quick question for you with regards to mortgage servicing assets. FSOC seems to be intent on trying to implement new capital standards on these folks. And I guess my first question is, where's the problem? And what problem we're trying to solve? Where's the risk?
Congressman, could I just ask for clarification? What capital standards are you referring to?
There's FSOC capital rules on mortgage servicing assets, and what we're seeing is that the small banks, even large banks, are selling all their mortgage servicing assets to non-banks as a result of the capital rules that are being implemented.
So we are definitely seeing that there are higher capital standards for banks, in general for banks. And to the extent that banks choose to change their business plans and get out of one line of business or into another, that's obviously something that we need to keep an eye on.
Well, basically, I guess maybe let me back up here. The Basel III rule was the one that really is impacting us, and it's again, it's something that's concerning to me from the standpoint that we're allowing the foreign rules and regulations, which to my knowledge, they don't have mortgage servicing asset activity in foreign countries. So we're the only one that does this sort of activity. And yet we're allowing the Basel III rules, which are basically foreign rules, to impact our way of doing business here in this country. Number one, where's the risk? What's the problem? And why are we allowing the entities from other countries to regulate a business that is basically American in nature?
Well, the capital standards that our regulators have put into place are actually in some ways tougher than Basel III. So it's not that Basel III put the capital requirements in place. Our national authorities have to put our capital requirements in place. We have driven Basel III to a higher standard because one of the things we worry about is that a risk that we face is that other countries don't have the capital requirements that we have, and their banks are not going to be as sound as they need to be.
This is about mortgage servicing assets. The servicer of these assets, where's the risk with a servicer, somebody who services loans?
I think the question actually is a broader one in terms of
No, it's pretty specific. Where's the problem that entities that service loans need to have more capital? I mean, where's the connectivity to our financial system that causes a greater risk that they have to have more capital?
Capital requirements are on all of a bank's assets. So that I think is really the issue. But I'm happy to follow up with you on the specific question of mortgage servicers.
Well, it's interesting because, as we go through this process, I think with the previous question, one of the folks I think was talking, maybe it was Mr. McHenry. We're talking about some of the stress tests that banks are doing, and the big banks' modeling is allowed to be different than it is from smaller banks. And yet, when you allow them to design their own modeling, you come up with a completely different capital ratio as if you would use that same modeling for smaller banks. And so I think you're using two sizes to two different sets of rules with regards to big guys versus little guys. And I have a real problem with that. And it continues to be rampant through all of the things that the Treasury does. Well, two sets of rules.
The regulators have gone to great lengths to try and reflect the special circumstances around small banks and community banks. And it's not the banks that set the standards for stress tests. It's the regulators who conduct the stress tests. So
yeah, but Mr. Secretary, you're allowing the banks to also determine their own models on how they determine their capital, and that's not right because you have to have the same set of standards for everybody. You can't have two sets of standards, and it goes back to, well, I just have a real problem with that particular. Let me just go. I only got 24 seconds left. Your comment a while ago that insurance companies were a part of the cause of the collapse of 2007, 2008, which I wrote down here. It's stunning, absolutely stunning. I defy you to give me an example of one insurance company that's truly the insurance part of their business was a cause of the collapse. Tell me, was it insurance policy, insurance rate, and insurance lack of claims processing? Was that a cause of 2008, 2007?
I used AIG as an example. And
Mr. Secretary, you know as well as I do that AIG, the financial portion of that company, it wasn't the insurance portion of that company. It was the financial portion of that company was the problem.